Hi, this is Randy Finney with the right side of the chart, and today is Friday, February 5th, 2016. I'm doing this video starting at it's after 3 o'clock, about 3:12 Eastern Time when I'm starting this. Hope to get it out before the close, so I'll talk quick, very quick, try to get this all in. And what I wanted to do is really take a look now at the longer term charts on the miners. I know I've done a lot of videos lately, especially posted in the trading room, both on the broad markets and the miners, because a lot's going on. So when trading activity kicks up, you can expect a lot more posts, video commentary. And the videos just help me to get all my thoughts out, because trading, there's just so many factors that go into all of this stuff. And right now we're just going to focus on the long-term chart. So here's GDX. I posted this chart in the trading room today. We have really nice, very solid resistance around 17. Comes in about 17 to 1720. We'll maybe take a peek at the daily chart if I get a minute here in this video. But right now you see the reactions from back in '08. There was a support shelf the miners traded on 2014 and 15. That broke out, so we've tested from below. Not to mention this downtrend line. This is the same downtrend line that I showed on the daily chart. Now, keep in mind, yes, we have taken that downtrend line out on the daily time frame today, and we may be, depending on how it's drawn here, poking above it on the weekly. You can play around with these. I have it as accurate as I can here. Let's see. Let's make sure. Trying to capture as many reactions. You want to come close to this one. So give or take. Now, the point is, this is not, even if we're above it, actually, we're right on it on the weekly time frame, the way I have it drawn here. And you can see I'm trying to capture these lines. And even if I moved it a little lower, we're a hair above it. Most importantly, and this is what I continue to impress in the trading room, we have had a uber extended run. It's not unheard of for the miners to have such a run, but now we're up in 3 weeks, about 35%. And that is by far on the tail end of what the miners have, historically done in such short order, even though they can really move when they move. And they can, as I say, overbought, can continue to become overbought for a lot longer than most people expect. With that being said, even if that trend line gets closed above today, which it probably will on the daily chart, we're not above it. And even if we are above it, we're hardly above it by a fair margin, especially on the weekly time frame. More importantly, you have an overextended run into resistance, downtrend line resistance, as well as a major horizontal resistance level overhead. So as I mentioned in the video earlier today, at best, I expect a breakout on the daily time frame. Maybe we run up 1720 area. That's where that resistance comes in, and then come in and make a back test of that trend line, which is, it's a pretty steep downtrend line. That means prices will come in at a lower level, lower than where they are today. So that's just the near-term case. We still have these bullish divergences in place. It's possible. Anything is possible. There's a lot of money in the market. For months, many months, I've made the bullish case on the miners, both technically and fundamentally. By fundamentally, those of you new to the site, there were two things I focused on over the last year, actually about the last 6 months or so, and that is gold. Okay, let me go back to the miners. Okay, just look at where the miners are right now relative to where they were back in the meltdown in '08. So there's the miners in '08. And what I'm getting at is there are short-term disconnects in pricing in the market. But okay, if the miners were fairly valued at that point, they recently, and this is when I started making the case down here, when they were in the $14, $13, $12 area, well below the 2008 lows. Now I'm going to flip over to a chart of GLD, the gold ETF. This is gold here at the same point in time where the miners had that previous low. Remember, the miners are trading below there. Why gold prices, and I quantified this in those posts. You just have to look it up. I don't know offhand. So, at the time I was making the case that gold is 60% higher than it was back in 2008, yet the miners were actually below those prices. And that was one fundamental case. I know that might be a simplistic view for some of you, and just take it for what it's worth. I also made the case that oil, energy is one of the largest costs. There's a tremendous amount of energy, fuel, trucks, machines to pull to extract gold and silver from the ground, and process it, sift through all the rocks and other junk that comes up through there. So you look at oil being one of their largest costs, and look at oil prices down. Again, this is the case I made, 60-something%. So, the fundamental case is there, with gold prices being substantially higher where they were when the miners were selling at higher levels back in 2009, and really any point in between, and oil being much lower. So the gold mining stocks have finally started to catch a bid, and that's good. And this tells me that this downtrend line will be broken out at some point in the future, most likely in the coming months. I just still think we get another pullback. I think it's a little too much, a little too quickly, right up into that dual resistance level. Now, if you're still with me, what I'll do is we'll go through very fast. We'll walk through the components of GDX. I keep a watch list. It's to the left of the screen. Here, if you want to take a peek at it, here's my watch list. These are all the components of GDX, and I rank them by market cap. So we're going to start up at the top with Barrick Gold, ABX, and just show you what I see. Now, this is a type of breakout I like. I can't take anything away from this from a bullish perspective. I like to see impulsive breakouts. Had Barrick closed, let's say, right here, right up at this resistance level. This was key resistance here as well. And let's say it had taken out that trend line we're poised to close here this week. That, to me, would be a breakout that has a decent probability of failing. However, that's an impulsive breakout, so can't take anything away from Barrick, and Barrick's one of the leaders in the industry. Yes, it has some work to be done. These are resistance levels, and like everything else, it's extremely overbought in the near term. That's taking, from we've went from the RSI deeply oversold levels all the way up to almost oversold levels in very short order. However, bigger picture, these things are just very, very oversold. They're coming off a vicious bear market. So that stock dropped 90%. So, even this move, as much as it was, the stock is coming off its highs at 50, 58 bucks, and it's still only, 11.47. So I can make the case both ways. All I'm doing right now, I'm making a longer term bullish case. I think this is a bullish breakout. And I think just near term, it's getting a little frothy, especially to chase these if you don't already own them. Tried to color that screen draw tool. Let me change the color of the color of the arrow real quick here. Color it white. And so this is what I'm thinking here. At some point, we're going to get a healthy pullback. This is just a momentum-fueled rally, a little too soon, and then ultimately we move up to that level. All right, let's move on. The next one, we'll go through these fast. And my point here is a couple of these have broken out, some haven't. There's Newmont, nice downtrend line. Again, we're looking at 10-year weekly charts, or at least a weekly time frame. I may zoom in on the time just to focus on the chart. This is a very well-defined downtrend line. And Newmont's broken out today, but again, on a very extended run. And from my experience, when you have a breakout of a well-watched technical level, if prices have made an extremely extended run to get up to the point and then break out without any type of consolidation or pullback first, that breakout is very much prone to fail. The odds of a failure, in other words, a move back below the trend line, or at the very least a back test. If I had to draw it out here and take my best guess, I would say that Newmont, give me 1 second here. Let's see, I would say it probably pulls back and there's that horizontal line, at that point, and then moves higher. So that's yet to be seen, but let's go ahead, continue on. GG, this is number 3. Now here's one, and like I said, I'll get to quite a few more. So we had the sector itself. I pointed out that GDX as a whole is at resistance. And remember, an ETF is simply the sum of its parts, and that's what we're looking at here. We're looking at the parts. Bullish divergence, nice chart, beautiful chart, and over time, I expect this one to go higher, but now we're closing at resistance. We're going to close the week there. I don't see a lot on FNV. I'm not going to try to make anything out of that chart. Here's a breakout. Not crazy about this trend line. The reason being we only have 2 reactions before today. We didn't have a reaction on this trend line. A lot of TA books, and in my book, any 2 points, I'll draw this because that's a potential trend line, but it really takes a third reaction to validate a trend line, and we didn't have that there. There's some resistance that we took out, so net bullish. There's also a reaction high right there. Again, all in all, bullish price action, especially with this divergences confirming the wedge breakouts. Here's AEM. That's a nice breakout. That one will stick. Again, I'm doing this video just before the close. 40 now, about 38 minutes left in trading, and it would take the reversal of a lifetime to close these guys back below those trend lines. So a lot of these will close. Some of those won't. There's SLW, Silver Wheaton. That's a member of GDX. A lot of these companies pull both gold and silver out of the ground. So a great looking pattern, divergent bottom. In fact, I think I see a lot of opportunity here. That one's probably headed over at least to this level right here, this intersecting downtrend line and horizontal support in the coming weeks to months. But there's AUY right at downtrend line resistance. So another one at resistance. This is a Toronto gold stock listed on the TSX, DGC, and not so much that it's at the top of this wedge, but more so this horizontal resistance line there. So there's another stock at a pretty significant resistance level. GFI poised to close right up against that downtrend line after an extended run. If it manages to get through there, it has a pretty solid resistance at 466. I don't see much on SBGL other than if we go back to it. You look at these previous reaction highs. I should mention that. That would be I'd be remiss not to point out that is solid resistance 1, 2, 3. This is the entire trading history. This one hasn't been around for 10 years, only a few years. That's a weekly chart. So there's another stock at resistance, again coming off a very extended overbought run. I'm just making the case for a near-term pullback in these stocks. And I think we've just seen a buying frenzy over the last few days. So there's KGC, one of the big ones, and boom, look at that, right at very well-defined downtrend line resistance. Look at the reactions on this one. There, numerous reactions at that point in time, reaction there. And now we're going to close there today, give or take, so that'll give it another reaction on that level. It's a big question. Do we punch right on through there and keep going like those levels weren't there? This one was nice. Look at Royal Gold. I'm sorry. We had a nice bear flag action, impulsive move down, bear flag continuation on the weekly chart, and a breakdown which matched the flagpole. But look at that reversal. Now, right back to that bear flag consolidation area. So this is resistance. There was a lot of trading, a lot of supply right there, a lot of trades that went on. So that whole area, the flag itself is resistance. And if Royal Gold happens to get past there, you have some nice resistance here, not too much farther overhead on the weekly chart there. AUY, that looks good. That one really hasn't even broken out yet. It has this pattern here, nice strong divergent low. And this must have been from another video. I drew this bear flag pattern. This is the flagpole, bearish pennant really right here, that consolidation and the breakdown. And I must have put that measurement at the time, and you can see that's about how far that one went, a little bit farther. So there's a nice one. And you can take this video two ways also. I'm pointing out a lot of beautiful patterns. So you either get these on the back test, you wait for the breakouts. I mean, if you're all in bullish and you want to keep buying gold stocks here, I'm showing you some of my favorites. I like them all. I just want to wait. Personally, my taste is to wait for a pullback at this point to get back into these guys. I was, long off the recent fake out, got out too early, reversed it for a short, and just didn't get a chance to get back in. That's what these things do sometimes. They don't let you in. So anyways, that would be a very ideal target. This is a solid resistance zone. You look at the reactions here on the weekly chart. But a big move too, to quantify it from here, 227. If we got up to the bottom of that resistance zone, you're talking 50% run. So a lot of meat to be made on that one. I just don't think I'd be chasing it here today. Tahoe, downtrend line, right at downtrend line resistance. EGO, not the best defined downtrend line. I wouldn't put too much weighting into that. Only a couple reactions to just a nice one coming off the bottom. More importantly, we do have some pretty good resistance that the stock is coming up to, and it will almost certainly have some problems trying to get through there, at least on the initial tag. CGTO, another Canadian miner listed on the Toronto Exchange. This one looks like a breakdown and back test. So that one's actually, this looks like this one held up relatively well. It's been moving up for a while. Got ahead of itself, broke down its back testing right now. So, in a vacuum, to me, this would be a short, a breakdown back test. Not that I'm going to put a long-term short on that, but that thing could be, if that was it's a little too large to be a bear flag, to be honest with you. But it is some type of wedging type pattern, and most importantly, that bottom trend line. It's testing from below after breaking down. Now let's just get off this screen. New gold, there's a decent downtrend line. Prices have managed to close or look like they'll close a little bit above it this week, but not by a whole lot. That's the kind of breakout that I can see that if I were going to take it, I'd want to see an additional week, some additional gains built onto that. It's just not close enough. BVN looks good. Nice divergent low like most of these stocks. And I don't really see not a whole lot. There's a little resistance there, but that's your big resistance level up there at 581. If and when it gets there, there's Pan American Silver. Nice breakout, past the downtrend line, but look at that resistance. Numerous reactions from above, from below, from above. So I'm looking at just a wall of resistance on a lot of these stocks. A couple of them have cleared it. This one's trying to peek its head out. Recently had a fake breakout, false breakout, and that's a nice symmetrical triangle pattern. AGI, resistance, next resistance, trendline resistance. So we've got to get above this, call it 380 level, and a solid break. Remember, I often talk about momentum-fueled overshoots. The miners are going parabolic right now, like they have a rocket pack on their back, and as such, what they're going to do is they're going to overshoot resistance. That's not uncommon. That's why we've taken it on the daily chart, at least the way I had it drawn, but I wouldn't be surprised to see us come back in next week. Helka, HL, just not a lot there. There's a downtrend line, and that one's got a way to go. I don't see any major resistance above it, and there's a little bit right there. But BTG, wow, that one's got a way to go. Now we're getting, keep in mind, I went through this list in descending order of market caps. So now we're getting to this guy's selling for under $1 a share. These are speculative. I probably shouldn't even spend time, and they don't make up probably much of a weighting in GDX. But there's some targets if it gets up there. It'd be bullish anytime a stock gets above $1 a share, because then you don't have the delisting threat going. So, that's why that stock held $1. You'll see a lot of times when stocks fall and approach that dollar range, if the company doesn't do a reverse split to get that share price up, you'll see them fight so hard to hold it. And then once it gives up the dollar, it gives up the ghost and that dollar level, and that's what happened here. So, but on the flip side, if it can regain that dollar level here soon, you might see some buyers step in. But again, be very, very careful. The miners as a group are extremely volatile. You start playing penny stock gold miners, you might as well go to Vegas and pull the slot machine. Let's see. Don't see too much there, and I didn't have this one marked up, but again, I'm not going to spend any time on it. We're down to now the little names, the small ones. IAG, $1.82, just barely breaking out. So we'll see how that goes next week, and if it can take that out, it might run all the way up here at about 246. Okay, I've cycled through them all. We're back to Barrick, so that's it. Just wanted to give you the long-term outlook and point out that many of these stocks, although the charts look bullish longer term, they're just quite extended, and quite a few of the key stocks at resistance. So we could, sooner or later we're going to get a pullback here, and it's just a matter of how much. So we'll keep an eye on that and try to time a entry back in on the long side using the shorter term charts. Okay, this has been Randy Finney with Right Side of the Chart. Have a great weekend.